Hello, this is Michael Beatman with your Gateway FS weekly wrap up for Thursday, July 2nd. It is a short trading week with the holiday tomorrow, and the Chicago Board of Trade is closed tomorrow, July 3rd. We had a good week in the grain markets. September corn was up 24 and a quarter. August beans were up 31 and a quarter cent, and September wheat was up 16 and a quarter. We had such a good week, and it was kicked off by the report that you see on your screen. These are the USDA's quarterly stocks reports, and what really drove the market, in most people's opinion, is the planted acres report. So on the top, you see what the USDA says that that our grain stocks are ending June 1st, 2020. And you can see that the corn number is a little bit higher than the trade was thinking. Beans are a little bit lower, and wheat is a little bit higher. So overall, this would have been a slightly bearish report if we just looked at the stocks. But the big kicker was the acres, and particularly corn acres came in way under analyst expectations, and the USDA ended up reducing planted corn acres by 5 million acres. Beans were fairly similar. It's just that the trade was leaning towards about 84.7 million, and the USDA came in at 83.8. This report was out on Tuesday, and it really did help push the markets forward. So here you're looking at an updated September corn futures chart, and you can see we closed today at 343, and yesterday's high would have been 353. So in the short term, you would think that there's at least 10 cents to the upside. And to the downside, you're going to find a lot of support, I would think, just based on looking at the chart at the 336 level. You're going to find quite a bit of support there for September futures. A lot of fundamentals going into the corn market. We're trading weather right now, so if the 14-day forecast turns hot and dry, not a great time for that, because a lot of corn around the country is tasseling. So guys are thinking that the next 2 to 3 weeks is going to tell us a lot about how big of a crop we're going to have, even with the 5 million acres the USDA just took away from the planted corn acres. So here you're looking at a November bean chart. You can see beans really started rallying back around the 1st of June, and that was because China came to the table and started buying U.S. soybeans again, and in a pretty large way, both old crop and more so new crop, which this chart reflects November futures. So you can see that we closed today at 897 and a quarter, and the last chance you would have got to make that sale would have been back on March 11th. That's the last time that futures were this high. It is of note that we are off of the April 21st lows, and we've rallied about 65 cents since April 21st. So from the Gateway customers, we have seen quite a bit of selling activity, which is good. I mean, you like to sell into a rally, and hopefully it will continue going forward. Beans are more so dependent on the China demand still, in my opinion, just because they did add a few acres. I think we're going to have a big bean crop along with the big corn crop, but as long as China comes to the table and keeps buying, there's no reason that beans can't continue to rally here. With all possibility, having an upside of another maybe 10, maybe 20 cents all the way up to 9.20, get us back to where we were pre-coronavirus. So with that, I'm sorry this ran a little bit long. I hope everybody has a happy 4th of July. If you have any questions, as always, give myself, Adam Parker, or Phil Sally a call at 282-4000. Thank you.